All right, so I spent 3 hours just going down the TikTok rabbit hole. And let me tell you, I need therapy after what I just watched. I'm about to show you the most financially devastating TikToks that I could find. And trust me, by the end of this video, you're either gonna feel really good about your situation or you're gonna realize that you're gonna need to make some serious changes. Either way, you're gonna learn exactly what not to do with your money.
Hello everybody, and welcome back to another Finance Friday with Wyatt. We're going to be talking about my credit card debt that reached $68,000 this month or this week, and then we'll talk about my other debt here. Let me pull up the weekly spreadsheet. So this is where we're currently at right now, $68,497.80. I did look, it went up a little bit from last week again, you guys. It went up about $400. Last week we were just under $68,000, so that's not good. The reason though, we got charged interest on one of our Bank of Americas and on the Sallie Mae card. You guys, the balance just keeps growing because that's the card I'm using right now because I have no cash, because all my cash is going towards my payments, and so I have to charge, you know what I'm saying? And so that card is almost going to be at its limit, and I don't know what I'm going to do then, honestly. As you can see, I did make some payments. Some of them are gone in here, but we still have payments due before the end of the month. And then y'all, this Amex Platinum payment, $1,120. Girl, I don't know how we gonna do it. But actually, I called Amex this week and they have a financial hardship program. A lot of you told me about it, and so I did call. And it's what they're gonna do, and I think I'm gonna do the program. They're gonna wrap up all my debt, so all three credit cards, the Platinum, the Preferred, and the Cash, wrap it up in a bundle of debt, put it at 9.99% interest rate, and I'll make about a $231 payment monthly until it's paid off.
Hold up, did this dude just casually drop that he has $250,000 in debt? Like, he's talking about the weather, and he said that it went up from last week. This is literally the definition of a debt spiral. He's using credit cards to pay for basic living expenses because all of his money is going to minimum payments. This is trying to put out a fire with gasoline. I really want to know what he went to school for because most of his debt is from student loans, and I really hope that it was worth it and he could actually put to use, but it doesn't seem like it. Because without a high-paying job, this dude really has little choice. I'm honestly glad that he reached out to Amex for the hardship program. Most people don't know that a lot of issuers like banks or credit unions offer something like this. This is where the lender will give you some sort of a break, such as reducing your interest rate or bundling all of your debts into one payment so you can pay it off. He also mentioned that they stopped all of his cards from working and they stopped charging him the annual fee. Because I was about to say that it makes no sense for this guy to hold on to American Express card, which currently has an annual fee of roughly around $700.
Hey, what's going on, brother? This is Yusuf from Auto Cafe.
Hi, Yusuf.
How are you, man?
I'm good.
All right, so I'm just calling an update on that 2019 Mercedes C300 you put in credit app for.
Yeah.
I'm still a little confused. I know you said that your credit score was 670, right? Are you pulling that live, or is that something that you had a while back?
I'm currently looking at it now.
Okay, so yeah, I pulled your credit score. You don't have a 670 credit score. You have a 559. That's a discrepancy right now because I submitted you to Westlake, One Main, Exeter, and a couple other banks. They're all coming back 28.9%, 29.9%. And your payments right now, since you have limited credit, because this is the first time you ever financed a car, right?
Yeah.
Typically, when you look at a credit profile when you're financing a car, the issue is a lot of banks are going to want to see like comparable history. They want to see good on-time payments for a while, right? 2 years, 3 years. So listen, I know you want to get into a nice Mercedes, and right now the Mercedes, if we get you into it, you're going to have more than $1,000 down. If all you have is $1,000, I would get a cheaper car. So that you need $6,500 down to get into our 2019 Mercedes C300. And their interest rate right now is at 28.9 at $897 a month. And you live in the Bronx, right? You're in New York?
Yeah.
So if you live in the Bronx in New York, you already know that insurance is really expensive. So unfortunately, this would be a $1,200 a month car. I say we get you into a cheaper car, try to find you something that you can kind of build some sort of comparable history, some good payment history on your credit. And then in 6 months, a year, keep it, something reliable, cheap on insurance, cheaper payments, or refinance or get a better car. That's what I say we do. Because right now, like I said, you're looking at a 28% interest rate. And listen, you're in the Bronx. I know some dealership there will get you into whatever car you want with $1,000 down, but I'm just being real with you. It's going to be very short-sighted and short-term.
I'm pretty sure this happens all the time. This person calls into the dealership claiming that they have a 670 credit score, wanted to finance a 2019 Mercedes C300, and when they actually pulled his credit score, it was like a 560 or something like that. Most people don't realize that whenever they are looking for auto financing, the credit score that's shown on your Credit Karma app or whatever banking app that you use isn't the real number that they are actually looking at. There is something called industry scores. For instance, if you're looking at a credit card, a mortgage, or in this case, an auto loan, there are specific credit scores that specific lenders will take a look at. So when it comes to auto credit scores, they tend to look at previous histories of auto loans and how well you do with like installment debt, which is loans that you pay over time. So when you get a credit score from Credit Karma, it's mostly likely gonna be inflated than what the dealership is gonna see. But what I really like with the salesman, which is an oxymoron, he's actually trying to save this guy from himself. A $1,200 a month car payment just to commute from New York City to upstate. The guy on the phone seems pretty young, and I'm pretty sure that he wants to get into something nice to show off to his friends or buddies or whatever. I've seen this countless of times while I was in the Marine Corps. Young kids who started making some money, they decided to get into a 5 or 7-year-old European car just so they can flex to show that they're doing better than everybody in their hometown. And the salesman is completely right about building comparable payment history. So you don't go from zero to hero for Mercedes. So the ideal situation for this buyer is just to buy a cheap car, then build up that auto loan history. After 6 months to a year, if he's still doing well at his job, then he could definitely trade that in or just sell it and just get into a nicer car at a much better rate. From the sound of things, if his credit score is in the 560s, then there's most likely some sort of negative items on his credit report. It sounds like he would benefit from credit repair. If you are in the same situation, I do have a credit repair software called Credit Rehab Pro. It allows you to easily dispute as many accounts as you want across all 3 bureaus. In the matter of seconds, you can create dispute letters tailored to your situation and print them out at home. I do have a link down in the description if you want to check it out, but regardless, building comparable credit history is one of the pathways to getting better financing down the road.
Lily, what kind of car do you drive and what's your payment?
It's a Ram 3500 dually and it's $1,300 a month.
Yo, Chase, what kind of car do you drive and what's your payment?
Weekend or daily? Both. Wrangler 1148 a month. We got that 570S, 31.
Hey, Robert, what kind of car do you drive? What's your payment?
Drive a Hellcat. My monthly payment is $1,427.
Yo, Armando, what kind of car do you drive? What's your payment?
Toyota Corolla. It's $273.
Hey, Ara, what kind of car do you drive and what's your payment?
Gladiator 530.
Hey, Christian, what kind of car do you drive? What's your payment?
Drive a 2009 Ford Escape, $0 a month, all paid off.
That first person is paying $1,300 a month for her Ram truck. What in the world is she hauling? I'm really curious about what the second guy does, at least on the side, because he has over $4,000 in just car payments. And it really seems that he didn't really put that much down because the payments are pretty freaking high. And the guy at the end, which is like driving like a 09 Ford Escape, he's paying like $0 a month. That guy, he gets it. That's the energy that we need more of. Look, I get it. Cars are emotional purchases. We all want to look good rolling up to places, but when your car payment is more than some people's entire take-home pay, you're really not building wealth. You're building someone else's. Here's a reality check. If you're spending more than 20% of your take-home pay on transportation, you're doing it wrong. That also includes your insurance, your gas, and your maintenance, not just your payment. Cars are typically depreciating assets. It's not unheard of for a new car to lose 20% of its value within the first year. The sweet spot of buying a car is usually between 3 to 5 years. This way, you can let the first owner take most of the depreciation while you enjoy a relatively new car that still has a lot of life left.
Hey babe, can I pay my credit card bill? Sure, just insert the card for me, please. God dang! What happened? That's a fat credit card balance. I didn't know someone could owe that much money. I know. Can I just pay the minimum, please? You know, instead of making just the minimum payments, I have a better option. Banks offer this thing called balance transfers, where it allows you to take your current debt and put it onto a whole new credit card. Okay, and why would I do that? Because with balance transfers, you can get special promotions like 0% interest for up to like 18 months. That way you can pay off a good chunk of your debt without having interest added onto it as well. Huh, really? I didn't know you could do that. Yeah, well, when you follow Forrest, you'd be surprised what you can learn.
Okay, so this isn't completely wrong, but it is incomplete. Yes, balance transfers can be a useful tool for getting 0% interest periods, but the video makes it sound like it's a magical solution. Here's what he really didn't tell you, that most balance transfer cards charge 3 to 5% upfront. So if you decide to transfer $10,000, you immediately owe $300 to $500 more. Plus that 0% usually only lasts between 12 to 18 months. And if you don't pay it off on time, you're often looking at higher rates than before. You still would need a pretty decent credit score to qualify for another card. So if all of your credit cards are maxed out, you are already taking a big hit to your credit. So the likelihood of getting approved for another card, it's gonna be kind of low. Now, if you don't change your spending habits that got you into debt in the first place, now you have 2 credit cards with balances instead of 1. Now here's the insider hack. If you were to get approved for a 0% balance transfer business credit card, And if you were to transfer that debt from the personal account to the business account, this balance would be hidden from your personal credit. This way your credit would also improve in case you need it. Again, just make sure that you have a plan to pay off the debt.
Everyone's always like, Brenda, why are you working so hard? Why are you doing a full-time job and posting on TikTok all the dang time? It's because I have $78,327 in student loans. And you want to know how much unpaid interest I accrued in the month of February? $523.93. And this is me paying at least a minimum of $2,000 per month. Started with a little bit over $150-something thousand because I had the bright idea of going to grad school so that I can graduate in a healthcare job to help people, but not get paid enough for the amount of student loans I had to take out. Now, my fault, I went to a private university, but still, it shouldn't be this hard to pay off student loans. But based on my PT salary alone, there is absolutely no way that I could pay this much with just that salary alone and live a breathable, decent life. Make it make sense?
Okay, so this one actually makes me sad because she's actually doing everything right, but the system absolutely failed her. $150,000 in student loan debt just to become a physical therapist? That sounds criminal. Brenda's paying $2,000 a month and around $500 is going straight to interest. So that means that roughly around $1,500 or so went to principal. She's actually making progress even though it doesn't feel like it. So this one hits home a little bit more because I actually worked in healthcare before, and I get the attraction because a lot of people believe that they can make very good living plus a pretty secure job. While true, it can be a complete nightmare. There are people who got a nursing degree for under $40,000, while some pay upwards of $150,000 for a job that pays anywhere between $80,000 to $100,000 starting off in Southern California. With any type of career that you're getting into, you really have to crunch the numbers. In her situation, if she truly is trying to get rid of debt as quickly as possible, she either has to do some more overtime, pick up a side hustle, or reduce her expenses. Housing is typically the biggest expense that most people have, so if it is possible, I would recommend her to move in with family if it is nearby her work, or live with some roommates. It's gonna suck for a little bit, but if you want to get rid of debt as fast as possible, this is the way to do it. There's really no sugarcoating it. I've met way too many nurses. As soon as they graduate school, they get a nice apartment, then they get into a nice Mercedes, meanwhile trying to tackle their student loan. These people are not getting by, and their wealth is just getting destroyed by high expenses.
I've been seeing a lady for over a year, and she has borrowed over $1,700 from me that she has not paid back. I'm a single father with over $20,000 in debt. My wife passed away, and I'm living on just my salary. I have a 9-year-old son, and my daughter is 24. I am serious about this lady, but it bothers me that she has not fulfilled her promise to pay back my $1,700 after 9 months. How do I approach her about this concern?
Randy!
Listen.
Oh, man, Randy.
Dang, so this really isn't a credit problem, it's more of a relationship problem, but it teaches us something important about money and relationships. Whenever you lend out money, especially to romantic partners, you're really giving a gift and hoping for the best. I've been in this pickle before, not so much with a relationship partner, but with friends and family. And this always puts you in the worst awkward position, especially when you see them in person or at family gatherings. Because it will just never sit right with you, especially if they're going out and spending money and not paying you back. That's why I try to avoid lending money to friends at all costs, because this will make your relationship extremely messy. The same goes for family. So if you really can't afford to see that money again, then don't lend it. In this particular situation, Randy is lending out money that he can't afford to lose while carrying $20,000 of debt himself. He's making an emotional decision with money that he doesn't have.
Swipe the credit card. Swipe, 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 swipe. That's all you do. I'm amazed you don't got a surgery, carpal tunnel syndrome on all your guys' wrists from swiping my credit cards. Then I've got to go home, maneuver money from all different kinds of accounts to cover shopping sprees. All you guys do is shop. How much can one person have?
As a father myself, I actually feel this guy's frustration. There's nothing more stressful than watching someone you care about make financial decisions that you know that are probably going to hurt them long term. But I honestly think that he brought this upon himself. Adding your kids as authorized users is great, especially when you're going to be building their credit for when they're out in the real world. But when you're the parent, you do have controls over their credit limits, Plus, you don't have to give them the physical card that they can use. If you are in a relationship with someone whose spending habit stresses you out this much, that's a conversation that you need to have before it gets into the screaming point. So from the video, it seems like this dad is still paying for his kids' expenses. Now, if this is the case, I would prefer him to get his daughters a teen checking account. This way you can manage how much money that you want to provide for them so they can really never go over that amount. This way you solve two problems. You can help them build a credit, and you will teach them never to overspend and treat the cards like a physical cash and not like free money. So hopefully you enjoyed this video. If you want to hang out with me some more and learn more about credit, check out this video over here.
Cause I got $30,000 in credit card debt. When they call, I tell them I can't pay back yet. Credit card debt. Tomorrow I might find myself a dining room set or this Boba Fett. Credit card debt, credit card debt, credit card debt.